The Aussie dollar falls to a 4-month low. Woolworths facing up to 1,000 charges for underpayment of staff. And Melbourne overtakes Sydney as the country's biggest hotel market. Welcome to Fear and Greed Business News, Australia's best business podcast. It is Thursday, the 3rd of August, 2023. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, after the show today, your interview is with Rob Hogg, who is Head of Fixed Interest and Macro Research at UniSuper, which is one of the superannuation giants in Australia.
Sure is. We talk to Rob all about the outlook for the economy, what that means for investors, what's different this year compared to other years, and how UniSuper thinks about investing. You know, not that often do you get to talk to someone as important as Rob in such a big super fund. So it's just fascinating to get his insight into what he thinks about markets.
Yeah, at a mega fund. I love the way they describe these big ones as mega funds. It just makes them sound beefy.
Beefy. Well, I did know, what's the future fund has $200 billion to invest. That is mega, I think.
That is beefy. All right, the main story this morning, Sean, the Aussie dollar has hit its lowest level since March after the Reserve Bank surprised traders by not lifting interest rates on Tuesday.
The local currency fell as low as 65.8 US cents yesterday, which is its lowest level since June 1. In the short term, currencies move around in part due to interest rates. For example, if a global investor, like a superannuation fund, the future fund, thinks it will get a better return buying US government bonds rather than Aussie government bonds, then it puts its money into North America. They have to buy US dollars to do that, and that pushes the Aussie down. That's what happens in the short term. Now, following the Reserve Bank's decision on Tuesday to not lift interest rates, and the fact that there's a growing number of economists who think the central bank might not lift rates again, investors are looking for other places to park their money where they might get a higher interest rate. That all makes sense, and that's working against the local currency. That's a short-term phenomenon. In the medium to long term, the Aussie dollar is considered a commodity currency. The price of things like coal and iron ore play a really big role in its value. Now, given the relative weakness in the Chinese economy, which is the biggest buyer of Australian commodities, the local currency ain't getting much help on that front either. As a result, it's not looking real good at the moment.
Sean, I'm going to ask this next question. It's one of those things that you and I have worked together for a while now, and I probably should know this, but if I don't know, I'm sure there's other people that don't know it as well.
Possibly I don't either.
We always talk about the Aussie dollar against the US dollar. Why is that? And then I suppose that the follow-up question is how's it going against other currencies? But let's deal with the big one here. Why is it always the Aussie dollar against the US dollar?
That is a great question because I wondered about that for a long time. Mostly we talk about the Aussie-US exchange rate because commodities are almost all priced in US dollars. And so the Aussie-US dollar is by far the most influential exchange rate on Australia. Even if we're selling iron ore to China, it's priced in US dollars. So that's kind of why we're really interested in that. Gold is priced in US dollar, coal's priced in US dollars. Also, the US dollar is considered the globe's reserve currency, the one that everyone heads to when things get tough. So that's kind of the benchmark currency is another way of thinking of it. So that also, good. Answer the question.
That actually makes perfect sense. I love that example of selling iron ore to China. It doesn't go anywhere near the US, yet it's all still done in US dollars.
Yeah, that's right. I'll give you a history lesson. Michael, you got me going here. So the Aussie dollar was floated in late 1983, the Hawke-Keating years. The exchange rate has been as high as $1.10 US. So that means that if you were buying US dollars, you'd get $1.10, 110 US cents for 100 Aussie cents. It's also been down to 50 US cents. Now, 66 US cents or under, which is where it is now, is definitely at the lower end of long-term averages. Low 70s is kind of, I suppose, if there is a normal, low 70s is normal. You also mentioned the other exchange rates. Kind of interesting at the moment. Against the euro, the Aussie is at its lowest level in 3 years. Not good news for people travelling in 4 weeks' time. I know one.
I was wondering if that was going to come into this at all today, whether there was a slightly bitter tone kind of that was in your voice there? It feels like you're taking this very personally, Sean.
Yeah, well, it's being hammered against the euro. Same deal for the English pound, but against the Japanese yen, it's actually pretty strong. While it's about average against the Kiwi dollar, it's also about average against the Indian rupee, at least if you average it out over the past 3 years. Those other currencies I was talking about much longer time periods. So the Aussie is kind of weak, relatively weak, compared to its kind of 10, 20-year history.
Local markets, how'd they go yesterday?
Wasn't a good day at all. The S&P ASX 200 closed down 1.3% to 7,355 points, and it was very much a broad-based sell-off with around 80% of stocks ending lower. Maybe the market just got a bit ahead of itself over the past week or so. It was just a bad day. No great call-out as a reason, just everything was down. The utility sector did worse, though it had lots of friends, including the real estate investment trusts and the financials. The tech sector did best, though that index actually fell 0.5%, but it was the best of the 11 sub-indices under the ASX. Where to start in terms of large caps? Well, Goodman Group, Commonwealth Bank, Westpac, ANZ, Fortescue, Transurban and REA all fell by 2% or more. National Australia Bank, Macquarie, BHP, Santos, QBE, Brambles, I'm running out of breath here, they all fell by more than 1%. In fact, only one of the top 25 stocks ended higher, and that was WiseTech Global, which rose just 0.02%.
Only just.
It made it.
Yeah. What's happening in international markets?
Well, certainly the ASX wasn't alone. The Japanese, South Korean and Hong Kong markets all fell more than 2% yesterday, while China was off 1%. A downgrade in the US credit rating by Fitch, which I'll tell you about shortly, really didn't help sentiment across global markets. Oil prices rose after the American Petroleum Institute reported that nationwide crude stockpiles tumbled 15 million barrels last week. And Michael, gold is steady around that $1,950 an ounce level.
All right, we'll be back in a moment with the rest of the day's business news. Sean, Housing Minister Julie Collins reintroduced legislation into the House of Reps yesterday to set up the $10 billion Housing Australia Future Fund. That's the legislation that, if it doesn't pass in the Senate, will provide the government with a trigger for a double dissolution election.
The legislation's been blocked by the Coalition and the Greens, with the minor party demanding an agreement from National Cabinet for a rent freeze. Now, Collins, when reintroducing it a second time, vowed to use every method necessary to break the deadlock. Meanwhile, Greens MP Max Chandler-Mather dismissed the prospect of Labor forcing a double dissolution election as an empty threat. He also said the Greens are willing to negotiate with the government. Earlier in the day yesterday, Prime Minister Anthony Albanese said Labor and the Greens had already held substantial negotiations over the legislation.
Woolworths is facing more than 1,000 criminal charges for allegedly failing to pay long service leave to hundreds of Victorian workers.
The Victorian Wage Inspectorate launched action in the Melbourne Magistrates Court alleging Woolworths and its Woolstar subsidiary underpaid 1,235 former employees more than $1 million in long service leave. The offence opens up the supermarket giant to maximum fines of $10,000 for every day each underpayment occurred. Individual underpayments allegedly ranged from $250 to more than $12,000 between 2018 and 2021. Woolworths said it has identified discrete instances of potential non-compliance and self-reported the underpayments. It is a criminal offence for an employer to fail to pay long service leave in Victoria, where the leave applies to casual and fixed-term contract workers as well as permanent employees. It'd be interesting to watch this one.
This is an interesting one, Sean. The number of Qantas passengers upset about refunds, being unable to use $400 million worth of credits issued since the pandemic, poor service and flight cancellations all jumped sharply last year, according to unreleased data.
Yes, a draft document from the Airline Customer Advocate that's been held back from release since April, but was obtained by the Financial Review, shows the number of complaints about Qantas was sharply higher than pre-COVID-19, even though passenger numbers were much lower. The ACA said eligible complaints in 2022 rose to 1,426, up 138% on a year earlier, but in total it received more than 6,900 complaints from customers. Now, Qantas alone accounted for a disproportionate high 4,000 of those total complaints, followed by its subsidiary Jetstar, then Virgin Australia and Regional Express. While the high number year on year isn't really a surprise, given how many more flights took off last year, the number in 2022, though, was well above pre-COVID levels.
I mentioned this one at the top of the show, Sean. Melbourne has overtaken Sydney to become the country's biggest hotel market for the first time on the back of a building boom that's delivered nearly 5,000 new hotel rooms since 2020. That's a lot.
It sure is. Before the onset of the pandemic, the two cities were almost neck and neck, with Sydney offering 21,634 rooms. Melbourne had 21,597 rooms. I think that's quite remarkable. There's only 37 rooms difference between Sydney and Melbourne pre-pandemic. However, with 21 new hotels and nearly 5,000 rooms opening in less than 4 years in Melbourne, including Ritz-Carlton, Hilton and W Hotels, Melbourne has increased its accommodation market by 23% to almost 26,500 rooms, according to a new report by JLL. Sydney's growth has been slower. It's added 13 hotels and 2,200 rooms over the same period. Now, with a further 1,800 hotel rooms under construction in both cities, Melbourne is expected to end the current growth cycle with almost 27,500 rooms. Sydney will have about 24,500 rooms.
Those are really big numbers. I had no idea how many rooms there were individually in each of those cities. It's a bit of an eye-opener.
Yes, and so how many of those rooms are used? The levels tend to run kind of 70, 80% occupancy. So that's a lot of people using a hotel room every day.
On any given night.
Yeah.
Or day.
Sean,
we mentioned yesterday that Woodside CEO Meg O'Neill alleged that protesters and a film crew trespassed at her home. Turns out the film crew was from the ABC.
Not a good look for the national broadcaster. Communications Minister Michelle Rowland said the behaviour of protesters was completely unacceptable. While she noted the operational and editorial independence of the ABC, she said the broadcaster would provide her with detailed commentary, is how she put it, on the matter. Federal Resources Minister Madeleine King condemned the protesters, saying the behaviour could eventually lead to public figures needing security.
Businesses are, quote, deeply alarmed by the industrial relations reforms being considered by the Albanese government, says Australian Industry Group Chief Executive Innes Willocks.
Yes, Willocks is one of the leading advocates for the business community. He was speaking at the National Press Club in Canberra yesterday, and he said business is worried that the reforms are unnecessary, unproductive and conflict-inducing. He labelled the proposed changes as anti-productive, saying the same job, same pay laws were a productivity killer. He also said it's a myth that Australia's workforce has become more casualised. In fact, casuals now account for 22.2% of the workforce, down from about 25% at the turn of the century.
Sean, yesterday we spoke about the sale of Bondi Sands. Today it's Sea Folly. The swimwear brand has been sold by its private equity owner, Elle Catterton, for around $70 million.
Yeah, no, I'm going to take you on another history lesson here, so I apologise for that.
Never apologise for teaching me things, Sean.
Okay. So the $70 million is not quite the $450 million sale price of Bondi Sands to Japan's Keio Corporation that we spoke about yesterday. But just to confuse this story a bit, Sea Folly has reportedly been sold to a company called Bondi Brands Group. Rhymes with Bondi Sands, nothing to do with them. Bondi Brands Group, which has been described as an Asian strategic buyer.
That is confusing.
I would have thought all buyers were strategic. Anyway, we're talking about BBG, Bondi Brands Group. Sea Folly was originally founded in 1975. It was a family business till about 2014, when 70% was sold to Elle Capital Asia, which is the private equity arm of luxury goods giant LVMH. So that's Elle Capital. That didn't work out so well. So Elle Capital Asia was sold to Elle Catterton in 2016. So Elle Catterton ended up with Sea Folly and a few others, R.M. Williams and 2XU. Now, Sea Folly went into administration in 2020, and it was quite a controversial rescue package from Elle Catterton, its owner. Anyway, now it's been sold to Bondi Brands Group, which is the Asian strategic buyer. Pretty crazy decade for a company, pretty crazy story, really, particularly for the company that apparently has about 1/3 of the women's fashion swimwear market in Australia.
I said you never have to apologise for teaching me a history lesson. That does come with a little qualifier there. You probably do have to apologise for just how confusing that was between Bondi Sands, Bondi Brands, El Capital to El Catterton. That was a wild ride, Sean. Shall we go to international news now?
Yes, let's.
Former US President Donald Trump has been indicted for the third time, being charged yesterday morning Australian time over his efforts to overturn his defeat in the 2020 election.
Yeah, so in an indictment filed in federal court in Washington, Trump was charged with 3 criminal conspiracies to subvert the 2020 presidential election. He's accused of trying to undermine the counting of votes and the certification of the results. That's one. He's accused of obstructing a congressional investigation into attacks on the US Capitol on January 6, 2021. Number 2. Number 3, he's accused of conspiring against people's rights to vote and to have their votes counted. Now, the charges carry penalties of as much as 20 years in prison. Obviously, a long, long way to go before we start talking about prison for Donald Trump. It's the latest criminal case for Trump as he runs for the White House in 2024. Yesterday, he responded by saying it was the latest chapter in a, quote, pathetic attempt, end quote, by Democrats to interfere with the 2024 presidential election, in which he says he is the undisputed front runner.
Now, Sean, you mentioned this one. Global ratings agency Fitch has taken its top-tier sovereign credit grade from the United States, citing its growing deficits and an erosion of governance. Oh, that sounds saucy.
An erosion of governance sounds saucy. That has made me laugh. Now, look, this is partly an outcome of, all the hoo-ha about the US debt ceiling that were going on a couple of months ago.
Yes, I do recall it.
Yeah, so this is sort of partly an outcome of all that. So Fitch cut the US one level from AAA to AA+. It said tax cuts and new spending initiatives coupled with multiple economic shocks have swelled budget deficits, while medium-term challenges relating to rising entitlement costs remain largely unaddressed. A lower credit rating increases borrowing costs for the US government. Now, it's happened before to the US. S&P cut the US rating from AAA to AA+ in 2011, and that's where it's been ever since. The third main agency, Moody's, still has a AAA rating for the world's biggest economy. Treasury Secretary Janet Yellen quickly responded to the downgrade, calling it arbitrary and outdated. Maybe she's right, but it's still going to cost the US more to raise money.
And finally, Sean, China's internet overseer has announced new regulations to prevent children from spending too much time on their smartphones.
Yeah, so the regulations published by the Cyberspace Administration of China, which in itself is a cracking name, Cyberspace Administration of China.
Very saucy.
Are some of the very saucy, not as saucy as governance, but still.
No, nothing is, but please go on.
Infrastructure? Come on, Sean.
Oh, yeah, now you're talking. Beefy super funds? Oh, yeah.
Okay, so the regulations published by the Cyberspace Administration of China are some of the harshest restrictions on internet use in the world. Non-adult children. What the hell is a non-adult child?
I was actually wondering that. I'm glad it doesn't make sense to you either, but I'm assuming that's an official term at the Cyberspace Administration of China.
Yes, I suppose so. So non-adult children won't be allowed to access the internet from mobile devices from 10 p.m. to 6 a.m. Other restrictions include a maximum of 2 hours mobile usage for kids between the ages of 16 and 18. I mean, I've no idea how they're going to enforce this. They do. I mean, mobile carriers and services often require real name registration, but I'd have Buckley's of enforcing that in my house.
No, but then again, you're not the Cyberspace Administration of China, are you?
No, true, very true.
Now, up next, Sean, is the Fear and Greed Daily interview. You are speaking, as we mentioned before, with Rob Hogg, Head of Fixed Interest and Macro Research at UniSuper.
A mega fund, as you put it. Yep, talking to Rob all about what he thinks of markets right now and going forward. Great chat for anyone interested in investing.
Yeah, it's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And if you haven't had a listen to the new episode of How Do They Afford That yet, which is our weekly sister podcast all about personal finance and making your money work a little bit harder for you, it is worth a listen because it does feature our Fear and Greed colleague, Adam Lang, who joins the conversation to basically teach us how to ask successfully for a pay rise. And there's a great video of Adam on our Instagram account, the Fear and Greed Instagram account as well, Fear and Greed Podcast. Check us out. Check Adam out. It's not bad. I'll put a link in today's show notes as well, and you can find that wherever you listen to podcasts. Thank you very much, Sean.
Thank you, Michael.
It's Thursday, the 3rd of August, 2023. Make sure you're following the podcast. Join us, as I mentioned, on Instagram, also on LinkedIn and X and Facebook. I'm Michael Thompson, and that was Fear and Greed Business News. Have a great day.